Hey, greetings traders. I wanted to do an impromptu video. I was just having dinner and a glass of wine, and I thought, you know what, it might be instructive and kind of fun to see how I spied the sector rotation into the IPO internet, basically the highly speculative cloud plays back on middle of November, and wrote about that for clients and thought it might be a good idea just to share a little bit of how that worked. Let's set up a little bit of an intro since I haven't done a YouTube video for a while. Assuming this lands on YouTube, I might just keep it on my website. And this is going to be a long video, relatively speaking, because I want to go through all the plays that I have been talking about for the past 2 months now in my live trading room. For those who don't know who I am, I trade for a living and support clients who do the same. I run a trader education service for professional retail clients and allocated trading for institutional. I'm kind of known for my calls on volatility and market timing. I am showing you one of my Twitter pages. I have a macro and a micro. I call myself a macro to micro analyst and trader because I'm looking at the backdrop of macro, which is an economics, fundamentals, technical, intermarket, and sentiment. And then I deliver the micro, which is much more actionable trade ideas and setups across 3 time frames: chase, swing, and trend. And this is for stocks, options, and futures. So getting to the tweet I just sent out today, it was in regards to this IPO sector rotation theme that I talked about, wrote about, and have traded with clients in my trading room since the middle of November. So you can see that I have basically today grabbed, just as an example, this list of 70. It's a personal watch list in my TC2000 charting software program, and I put this list together because it was a theme I was writing about and talking about every single day in my trading room. And you'll see 11/19, this is a track date, track price, and this is the percentage gain and also losses. Roku had some loss, I'm talking big picture in the last 2 months, is on the negative, but most of these stocks have just been rocking. So I, of course, am going to talk about them because the idea was, when I wrote about this back on November 16th, my market thoughts, IPOs as value plays. Okay, now we're right now January 13th. It's been 2 months, and how are they doing? So the idea was basically prompted on a few, let's say, background reasons, meaning we have, first and foremost, a macro background that's very conducive to a market advance. Just this week, for example, the Fed adds 83 billion in short-term money to the markets. So we're talking liquidity, and that's not the only liquidity that has been infused, if you will, into capital markets since the repo madness, September 3rd and 4th, which I wrote about. And that was a nice timing call as well for momentum into value plays and bond short. But getting to the point again of the backdrop of the market being conducive to a SPY melt up, it was the largest ever liquidity boost, 12-month change. And this chart actually comes from, let's get this, cross-border cap. It's all about liquidity, and it is from an article that John Authors from Bloomberg wrote about. I just found this fascinating, of course, because we're talking not just incredible backdrop of momentum due to liquidity, but we also have sentiment, extreme sentiment. This is, you might know Jason Gopert, who is Sentiment Trader. He does a great blog, and this was very much tracking smart money, dumb money, confidence spread, and it just continues to rise. You've seen the CNN greed, fear polls and all kinds of other sentiment gauges. We're frothy. I'm not going to get into fundamentals because as a market and individually as stocks, there is a lot of opinion on that. But I did want to give a backdrop of, yes, we have incredible liquidity coming into the market near term. The past 3 months, we have sentiment at extreme, and obviously we have a market that is not at all shy. Let me just show you in regards to bigger picture. We had a breakout here. This is the S&P, obviously. We had this same timing, if you will, back when markets were saved and all. This breakout has not slowed. So I'm not suggesting this as, oh good, let's go run in and buy all these stocks that I've been talking about and trading with clients for the past 2 months. I want to show you why I got into it in the first place. And these are some of the reasons. The other is an intermarket analysis that I do. So part of my focus, of course, in actionable trade setups is technical analysis. But my intermarket analysis really helps me time turns that then gives me the confidence to go in and do this trading on a smaller time frame. So back in, where was it? I'm going to get to it. November 16th, I wrote about how this stuff looked like it was going to be breaking out. So we had high beta breaking above a trend line. Momentum to S&P wasn't so exciting for me. Biotech looked like it was going to peak and start to turn lower, but the internet, and you can tell from this thumbnail sketch, and again, this is from October to now, but in particular, I wrote about this right in this sweet spot when it broke higher. So the pullback was actually pretty muted. You could see internet stocks have flown, internet, social media, and IPO stocks have flown, but that was basically the point, was seeing this divergence first and foremost, where the S&P had reached a very large high and IPOs had been plunging since July. I added, I think this is an inverse head and shoulders that looks like it's poised to move higher. The strength of the IPO ETF to the S&P was forming a bullish pattern. So to me, I liked that. There could be some large size moves potentially occurring into year end. So I took that as an opportunity to trade some positions. Crowdsource was one of them. LK at the time, this was 2 months ago, shot up 25% in one day. Roku ran 5 straight days at about 5% each day. We went through basically these IPO charts, and I just said, here they are. I think they're bullish if they stay above these price points. So that was one thing, and the intermarket, that's the technical analysis. And the intermarket was in large part based on this bottoming and turn higher. So then I put together for basically a pitch that I thought it was time to go into these, oversold IPO and momentum cloud plays. Because I thought they were going to be very conducive for longs. Now, not all of them are created equal. Where I want to go into this particular video is to show how do I spy what's, basing, what's breaking down, what's breaking higher in order to have a confidence. It's not enough just to know liquidity. And there are some who are very excited about the fundamental picture of some of these cloud plays. And I do follow some folks who are really good at that for, the growth story, if you will. But I don't want to get into that today. I really want to talk strongly about the individual plays just to show you why, technically, from a price action standpoint, what I recommended and why. I just think that I thought it might be helpful. Okay, let's begin. At the top of the leaderboard since 11/19, NEO has tracked a 100% return, and that's actually soft or light, if you will. It was much more. So here is what I recommended on NEO, and I am, again, very, very interested in technical analysis when it comes to sizing up the entry, low risk entry, and then identifying a stop, which is why it's a low risk entry, because a stop is nearby. If I'm right, it's long, and if I'm wrong, it's gone. So basically, this was on my watch list even before all of this stuff with the IPO momentum sector rotation idea, and that's because it was extremely oversold. So when I say extremely oversold, I work from 3 time frames in particular in my live trading room. I have a 1 hour chart up, a day chart, and a week chart, and the oversold nature of this being well below, if you will, from the IPO price, and well below the 10 week, which is this gray line here. This is very important to me. The 10 week from a swing trading perspective, it's bearish below and bullish above, period, end of point, and a close above is bullish. So this particular one had come right up to the 21. Again, this is the blue line, gray is the 10, and this is on a weekly time frame. It had come up and then sideways retracement. It stayed above the 10 week. So when this became of interest to me was literally around that same time where the IPOs were starting to move. That doesn't count. It did not close above the 10. That doesn't count. That doesn't count. That does. So it went sideways, and when it did pull back, it was a shallow pullback. When it when it broke out above, not just the fact that this was weekly trend line support, but it was now above the 10 and the 21. This looked very, very constructive. The trick was it was a binary event in that earnings was being announced, and this shot up, I think, 36% in one day, more, and came right back down. But the point was it closed extremely well. Then it had a negative report last week. Had no interest in this as long as it falls on a daily basis, below, if you will, the 200-day, but it's still there. So despite having a sell side report come out and it retracing anyway, just from good old-fashioned profit taking, it's still a bullish chart to me for a few reasons. One, it's a China play, and China, I believe, is very bullish. I've got my intermarket, I've got my macro, reasoning for that. But in short, this NEO definitely gapped higher on a weekly, above the 21 week. It threw past the 50 week, came right back inside the Keltner, the Bollinger Band and the Keltner channel. It closed below because that was an excessive move, right? We're talking excessive, but it's still doing really well. So I'm not suggesting this as a long, because I think it, is way past any opportunity. The easy money's been made. That was an earnings play. It has definitely retraced back down to the 200, and it's trying on very little volume. I'm not so excited about this right now, but as a theme, this was an IPO that was extremely oversold. It had finally gotten above the 10 and 21 week, which I adore as a low risk entry long. And sometimes, by the way, they don't work. This is not the same thing, but I will it's not an IPO, but the example of ABMD, where it had closed above the 10 and 21, and then today traded right back down below. This is just an example of, they don't always stick, okay? But it is a low risk entry for me in that space, and a China play. That one worked. LK has been phenomenal as an IPO play, meaning it got above the high of the price on the IPO day on this very large expansion bar. And this was when I was mentioning it had actually traded 25% in one day. And then it continued on the daily above the 3 and the 8. The yellow is a 3-day moving average. It is an EMA, by the way, not simple. That's an 8 EMA, and that's a 21. On an intraday, it's very different. I use a 7 and 17. I also have a 30-minute and a 15-minute on my other screen. But the point is, when I'm talking about swing trading, I'm using the weekly, and I'm making sure that it's kind of behaving well. So The stochastics kind of help. I've got lots of other indicators on my other screen as well. I definitely look at the fundamentals. I definitely look at the short interest. Like, for example, just the other day I said, this still has 54% short interest. This is going to turn into a Tesla. But the point is, it got above the IPO price, this $26. It moved, pulled back, shallow pullback. That's beautiful. And then it broke out decisively. And again, even at 33.45, you can see this. When it got down here in the trading room, which by the way, I'm live, it is recorded and it's closed captioning. So this is what I said. You can go back and record on that day to see it. This was a buy. As long as it stayed above 33.5, it was an opportunity to go long again. So this turned out, literally turned on a dime and headed higher. So this, for me, is blue sky. I'm not extremely excited about chasing it at this point, but my point is, from the IPO list on that particular, November 16th client post, these have worked out extremely well. They also have the market wind at their sails. They also have a good growth story. It's also China, and it's 54% short interest. What's not to love? Except the fact the market is extremely frothy, and we have a China trade deal potentially being signed on the 15th, and it could very well be by the rumor, sell the news event. I am just showing you how I got into this and why I recommended staying long, and what price points were resistance and support, and how it needed to behave, and what I thought would happen in this whole, trading game. Beyond, this has been sideways for more than several weeks, months. And this was a lovely, there's some little, feeling involved in this too, because when is it going to, break out in vertical fashion? Who the heck knows? But as long as it stays above this 74, support, if you will, this is a pretty good tell. And so what I was looking for was, can it get back inside the Keltner channel? That's the blue line here. I use both Keltner and Bollinger Band. But in the particular case, this needed to get inside the Keltner channel. And then, of course, it has since crossed up on the oscillator. But this was a squeeze. And it got above, not only into the Keltner channel on a weekly, but it shot above on the Bollinger Band, pulled back, shallow pullback to the 3-day. Again, stayed above the 8-day. Man, oh man, this is beyond bullish. 5-day move. Actually, that's kind of a sideways consolidation. Right into the 30-week. The thing should potentially calm down with the market, but right now it doesn't have much signs of reasonableness. So beyond is another example of technical analysis because of a squeeze, and this wasn't even a news-related item. Yes, it was. Forgive me. Canada, McDonald's in Canada was going to be test driving the Beyond Burger, but even before that, this thing was just poised and tightening to break out. Didn't really pay much attention to this one. I will be perfectly honest. It's internet. And the reason why I'm not so crazy about the options, by the way, how I use option flow, and this is kind of important. I'm not really big into open interest. I like volume. So today's option activity, it's a wall of calls. They're getting a little crazy. But the point is that, to me, I can follow on Wall Street Jesus, which is the only site that I am, lucky enough, I think, to have found early and use as kind of confirmation of sentiment. I don't trade unusual option activity. I want a theme. I want a chart read, and then I want to see what, the size positions and then the sprinkling of small stuff very frequently close together are doing in the options market. So I'm not going to get into option tactics in this particular video. I'm really trying to stay very close to the knitting of technical analysis and why this has just been a really great theme. And then intraday, you can see, again, this is the hourly, it stays above the 7 and 17. I mean, it only pulled back once here. And that was a nice digestion. And then, of course, cleared above the prior high, and it was just off to the races. Cleared above this high, it's off to the races. So yes, these were pulled back, and in some cases violently, but the technical read is bullish, the option read was bullish, and the market was bullish. Also China. All right, so I've been asked about some of these plays, Billy and IQ and Huya, and basically they hadn't done anything wrong. I wasn't personally excited about them. Again, the option flow is a little bit lower, but it just, again, not my kind of cup of tea. I like the really liquid ones with a very large option market because that's what I do. So they have done nothing wrong, and as you can see, they're up 40 and 33% respectively. This was oversold. It got back above this weekly support. Now it's above the 10, and you can kind of see that my theme. I'm really, really big into the 10-week and the 21-week. Chewy was a complete fake out. That was fun. So this was actually earnings. Everyone, and I mean, I think it was 7 to 10 puts to calls. They were expecting this to break down. It did not. It traded higher. Again, this is not my idea of a really fun chart. But nonetheless, it is above the 10 and 21. It's been digesting, and as long as it stays above the 10 and 21, basically 29 and a half is a really kind of good idea to stay above. Again, it's not such a great example, but I'm just showing you how when these got above, back in the middle of November, above the 10-week, they have stayed and they have moved higher. This is one of my favorite ones because I have, just this week, in fact, I loved the squeeze, the Bollinger Band squeeze, and this staying on the trend line, but more importantly, it was about, in my opinion, just from experience in patterns, it was about to go above the 10 and the 21 week, and I love this crossover, and you're going to see me, if you come into my trading room, that's what I'm looking for. Still need all the backdrop working in favor, but basically this just looked like it was poised to move higher, and my price target, first one was 55.30, so today it shot higher, 8.5%. No, I don't think this is done, and by the way, the market is still bullish. I'm impressed beyond means that money has rotated so strongly, but at the same time, I'm also looking this potential inverse head and shoulders. This could just get started. Some of these have already really taken off very high, and the fact that all the moving averages are now acting as support on a weekly is very, very bullish. So, and all, yes, everything looks fine except extremely extended. But that's a brand new one this week. Morningstar reversal, that's on my post, in fact, did not get above the trend line or the 10-week, came back down, was a gap up, which was bullish, stayed, but here's that 10 and 21, and once it gets above the 10 and 21, it just shoots higher into the 30-week. So I like this a lot. ZS, by the way, getting above the 10 and 21 and shooting up to the 30-week, this is a continuation. So it doesn't mean it's done, but that's definitely very nice looking chart. And the top, we still have the top of the Bollinger Band and Keltner channel up around the $36 mark. It's taking a little rest. I didn't really get excited about Ping, honestly, because there are no options, but it has done extremely well, as 24%. There are very few options here, so I typically ignore those unless a client asks in the trading room and they want price targets. Happy to oblige, but for the most part, I move on. FTCH is next. I think this puppy's going to 20, 19 or so. It's in a squeeze. It needs to obviously jump the shark and move higher, or I should say break out above, but this looks very constructive. The problem is it hasn't participated in this recent rally, and it is very oversold, but I still like both the fundamental growth story and this cradle formation, which typically results in a retracement. So I like that a lot. Plan hasn't done anything wrong. It has actually traded above its IPO the whole bloody time. Smile was interesting. So this got a little sell side hit to it as well. But that particular day when it gapped above, it was not holding above the 10-week, but this is just, again, kind of a short covering story potentially. Maybe some of the shorts are getting a little nervous, but nonetheless, this has been very, very recent and it hasn't really done anything. This one hasn't taken off yet, so it's a slack. That potentially should be next. So this is right tagged, if you will, between the 10 and the 21. It tried last week, and now I think 25 and a half, potentially higher. Very, very choppy intraday, but again, in my trading room, this was low risk entry. This needs to stay above. It definitely was basing. It's getting above the 10 and 21. It could pop up just like ZS did. Spot was interesting. This got above on earnings. Fabulous pullback. Stayed above the 10, the 21, and the 30 week. Got above the Keltner channel. Pulled back. This still looks constructive to me. I love MDB as an Okta because the chart pattern is this sideways and then breakout. Cradle formation, and now it's consolidating. It gets above 155. It can be very eventful. Okta trades very similarly with it, and it is, look, see, the same idea, right up to 131 and a half. Those were fun. C has just been in trend since this whole move. Where's my, 1116, and it has just been grinding sideways to higher. Here's the IPO ETF itself, and I'm just kind of going through because of returns. This is potential double bottom. I like that it's above the 10 and 21 for Zoom. It has definitely not partied like the others, but it has been very productive. Let's just say the expansion bar followed by 5 more days. There are some others that are, to me, much more interesting. Crowdsourced did the same kind of thing. Now it's gotten back above, and it's above the 10 and 21. Those are laggards. Maybe they will now take off. There has been, let's see. Yeah, Lyft is not ready. It's trying. PS is above the 10 and 21. This could be a mover. Some of these are, they've just been sideways consolidating, but they look very productive from a technical standpoint. I'm still just not so crazy about option flow. Datadog, we talked about this in the room as well. It has stayed above the 55 and the moving averages. It's just way slow. The big thing for me is this is the IPO high. It needs to get and stay above. Then potentially it can turn into an LK. Again, needs to get and stay above the high IPO price. So that looks, productive. CVET I like for next. I think CVET is going to move higher. This was, again, from the same exact playbook. It's way oversold, got above the 10, came back down, however, kind of not ready until it can get above 15. Then I think that will be very productive. PD, look at that, just sitting on 24. The 10-week needs to move higher. I think that can be a catch-up. Pins, we talked about a finance call spread for March in this for basically free to, selling the 17 calls and then buying a 20 by 23 call spread. It basically, selling of the puts would finance a call spread. This has a growth story, 100%. I mean, there's some fundamental reasons here of interest, but technically I'm not interested until it can close above 20 bucks. Dropbox, even though it had a lot of insider buying, it's still not above the 10 and the 21, so I'm not interested. Huya was very interesting. Big expansion bar, sideways consolidation, break above. That's the 100 week. It's very productive. Like this, it's a China play, but again, it's not as exciting as some of the China plays directly, like Baidu, one of my favorites. This has hit the trend line price target of 145 that I had, and now it pulled back pretty aggressively, so there's some profit taking here. But this has been one of those, let me just clean this up a little bit. This has been kind of another inverse head and shoulder, can move higher. It did a gap fill as well at this level. I actually played that into earnings. It had a shallow pullback, digestion, breakout. Another one that kind of looks like that, honestly, is 3D. Recommended this in the room. It did a really good job of a shallow pullback. Remember, I'm crazy about the 10 and the 21, and then it needs to clear all of that. And this was a great pattern for this cradle, right? So sideways, right up here. This still can move another $6 higher. So next area could be 15. If this is going to, continue with this expansion above, which was perfectly timed. It's almost like congruence. Time frame of the left shoulder. You've got the pullback, if you will. It gets above. It's trying very hard to stay above the 10, the 21, the 30 week. Same kind of period of time here as over on this side, and then it gaps up very strongly to the 100 week. Looks very productive. Although SSYS, not an IPO, is a much better run company, it's too messy for me. It also has an inverse head and shoulder. Looks very bullish, above 22, back to 25. But I'm just saying I use that kind of analysis on the IPOs. On everything else, patterns, moving averages, definitely, certain indicators like stochastics, but I like the theme of staying with IPOs a little bit better. Roku, it's not really that recent of an IPO, but that had extreme gap down, and I'm bearish Roku. Now, intraday, you can play this one. It's been, drop, bounce, drop, bounce, but to me, this is still a gap. Down on a weekly is very bearish, has not closed above a 10 and 21, not closed above a 10 and 21, very bearish. This thing still looks to roll over. So I'm not bullish on Roku. It's one of the ones that already had a huge advance, and it hasn't redeemed itself. So these are just some of the plays that have obviously been on my radar. I think the technical analysis was kind of the point of showing you that when a theme takes off, you can basket trade a whole bunch of stuff for capturing the trade idea using options. I'll leave that for clients. And to that end, okay, so in closing, you have seen my original post of how and why I got into this speculative, oversold IPO as value rotation trade from incredibly bullish backdrop, and then of course technical analysis of when to enter and how to stay long. I wanted to close with letting you know I do offer a live trading room where I make my market timing calls based on market moving news. I'm obviously tracking sector rotation very closely. I'm obviously setting trades up both for stock and options and monitoring flow. I look and work through value momentum trade ideas with clients, engage, answer questions, and obviously share my trade setups. Personally alerting clients. I have the trade room, brokerage triggered trade alerts. I do publish when inspired, when I see something that I see as an inflection point, and I would like to invite you, if you're interested, pop in for a day, a week, or a month. It now includes all the analysis from the trading room, as well as my written, all in one price. And it's a new year, new price, $350 a month, great value. Come on by and try it.